Yeah, sorry about that. We're good to go.
Okay.
Right. Okay.
Thank you.
No worries. Yeah. So the grant request was 2 million. Against a total investment of 13.6 million, and panel members again were unanimous in wanting to support the project on the basis of the obviously the added value that this will bring to the city region, but also the fact that again there was a competing location in terms of Wales. A funding agreement's been issued, and the company have exchanged contracts on the property in Leeds City Centre, and have been paid out 75% of the grant that was offered, so 1.5 million last week. The remainder again is linked to the new jobs. The second application that was circulated was from a pre-revenue technology company that developed a clean energy solution. The grant request was 1 million towards a 4.2 million investment to establish a new production facility in, again, Leeds or Wales. But in addition to that, there were other key costs associated with it, although not eligible for the programme. They were directly relevant to the wider project or the wider investment package that was needed to make the project viable. So that included nearly 7 million to invest in stock and a further 5.2 million working capital requirement. So basically the total funding package to make this work was over 16 million. At the point of application, the company still needed to raise 15 million to implement it in full. And basically, for that reason, and the fact that they didn't actually have any formal commercial contracts in place, panel members were unanimous in terms of wanting to reject it because of the very, very high risk and there's so many uncertainties, particularly around the funding package with it, but with a caveat that the company could potentially resubmit once key issues around contracts being in place and the funding package also being in place were resolved. So we're that one is basically on hold until those two key issues are resolved, and that's it on that.
Okay.
Up to now.
Thanks, Neil. It's a good update. Great. Brian, I think you've got your hand up. You wanted to come in.
Yeah, I mean, just to sum up what Neil said, 6 million committed to 9 businesses, creating 1,400 jobs is a great result. And when you consider, it's against the backdrop of the pandemic, the level of investment inquiries that we're getting in West Yorkshire has been really, really strong, and we've got a strong pipeline. And I think one of the things that differentiates our offer from the other regions is the skills of the workforce, and actually, the speed of response from officers and the team, and how we work together with our partners, with the local authority and others, to provide a really seamless service. And feedback we've had from investors is that, well, to be blunt about it, we're actually easier to do business with than some other locations, and that is a differentiator for the region. And I know it's an intangible thing, but I think it's really important and worth noting. And the two that I'm particularly excited about, obviously the Bradford firm expanding into Leeds is really positive for the region, but the London technology business has got huge potential. As Neil said, they manufacture smart sensors with lots of applications, monitoring movement in bridges or Premier League footballers and how much ground they're covering during a match. And I know Tom Reardon's brokered a meeting with Leeds United, and there's lots of other supply chain spin-offs that will come from that business. And again, Neil mentioned 400 jobs, but it could quite easily become 600 plus. So some really strong inward investments. Thank you.
No, thanks, Brian. I think you make some really good points there, and especially around the responsiveness of the team and the ability to work with companies. I think as from an SME point of view and investors, that's what they'll be looking for. Nobody likes a long no, things that take a long time to get through to any decision, whether that's a yes or no. So no, it's really good update. So thank you for that. Any questions from anybody for either Neil or Brian? Okay. Thanks both. So if we move on to the business growth programme, again, I think, Neil, is this you again who's covering sort of the main points from this paper off?
Yeah. Just a sec. Right. Yep. We're continuing to accept applications on a weekly basis, as reported probably, I think, in December, and the meetings in November and October. Demand for the programme is at its highest level for the past 18, 24 months. We're probably processing 4 or 5 new applications a week. So, it's good to see that companies are continuing to invest in what are obviously difficult times. So today we've got commitments of just over 42 million in place, 39 through the Standard Business Growth Programme, and just over 3 through the Flood Recovery Fund. A point to note is that our main source of funding through the Local Growth Fund came to an end at the end of March, after 6 years, but we do have in place monies through another government initiative, the Getting Building Fund, for a further 12 months to March 22, to fund capital grants through the Business Growth Programme. So it will be business as usual for the next 12 months after that. How this scheme will operate, if indeed it does operate, is subject to bids for further external funding. There's 2 new applications on the agenda today, which will be considered in the private part of the meeting, both from businesses based in Leeds. There were 2 applications considered at the meeting in December, which seems a long time ago now. The first from a Bradford-based business involved in design, manufacture of catering equipment. Basically, they operated from 3 sites in the district and wanted to consolidate on one larger site in Keighley, which has now happened. Total investment just shy of 1.9 million, primarily in additional capital equipment to increase production capacity and also fit out and refurbishment of the new site. The relocation's taken place, projected to create 20 new jobs, and they been issued with a funding agreement and have received a part payment of just over 440,000 today, and reported the creation of 5 new jobs. They're expected to claim the balance of the grant within the next week. Second was from a large Kirklees-based business. It's basically a provider of transactional integrated business communications. So in layman's terms, it sends mail shots out and other types of communications, both in digital and hard copy format. The focus of its application had 2 strands. One was investment in additional, let's call it, printing equipment to increase print capacity on the sort of hard copy mailing side, and secondly, support towards software development, which we're going to develop in-house through recruitment of additional staff to gradually transition away from being primarily or 90% a hard copy business to a digital communication business. And those investments collectively were anticipated to create 26 new skilled and very well paid jobs with average salaries in the region of 40,000. Panel members were mindful to support it for just over 150,000, which represent the contribution of 10% towards the capital equipment element only. We weren't mindful to support the software development side of it on the basis that the company was undertaking it in-house, and it was would support internal salary costs which aren't eligible under the programme. So basically, a formal funding agreement's been issued, and the companies expect to submit a first claim by the end of June. And that's it for the update on that one.
Okay. Thanks, Neil. Okay, any questions on the business growth programme for Neil? Okay, thanks, Neil. So if we now move on to Growing Places Fund, Kate, you're going to give us an update on Growing Places. Okay, over to you.
Thank you, Chair. This report is just for the panel's information, so providing an update on the latest budget position at the close of the financial year, as well as some project progress. At the time of writing the report, we had received 18.3 million of loans repaid, and we were expecting just under another 1.5 million back before the close of March. So I can report that 1.495 million has been received by the revolving investment fund. It relates to a joint loan that we held with them. So the RIF has received that payment back in on time, and we're now in the process of transferring those funds across via Leeds Treasury. So at the close of the financial year, just gone, 20.395 million allocation was returned. Got just under £1 million expected in the current financial year 21-22, and a further £4 million of loans to be repaid thereafter. So of that £20 million, Brian and the Economic Services Directorate are looking to bring forward opportunities through a new business accelerator fund, of which the panel will be aware. And so that capital will, subject to approvals, move forward into new types of investment in the future. In relation to projects with changed circumstances, project loan reference 210 for 1.5 million, which relates to a 10-year loan. That is just for the panel to note a rescheduling of repayments, still due to be repaid within the 10 years. That's due to the pandemic and just supporting the business with a level of cash flow. In terms of loans 315 and 308, those projects are bringing to the attention of the panel that they are now at project closure stage. And those items are just for the panel to note, Chair. Thank you.
Okay, thanks, Kate. And yeah, really positive around the ability to obviously reinvest that capital in the Business Accelerator Fund. So real positive. Looking forward to the outputs of that. So thank you. Any questions for Kate or any comments? Councillor Swift, think you're looking to come in?
Thank you very much, Chair. It's a more general question, if I may, not just for Kate, but for all the presenters. At these meetings, generally, once a year, maybe twice, we get an economic review of the Leeds City region from one or two of the officers that are not here today, actually, but they do a very thorough review of business in the Leeds City region. And today we've heard the three funds present. I wonder if there's an officer who might, maybe it's Brian, I don't know, who might be equipped to just give us a feeling, because it's been so long since we've met, I think, since 4 months or so, just to get a feeling of what the view is in Leeds City region. Is there an abundance of business just dying to invest, and we're going to see a fantastic acceleration of investment in the communities? Is that all right, Jim? I'm just really trying to get a feel for what the economic mood is based on these three presentations, and perhaps a summary of what other sources of information we have to feel that the world's going well or opposite.
Yeah, no, very good question, Councillor Swift. Brian, is that a question you can pick up?
Yeah, I can attempt to answer that one, Councillor Swift. I mean, the feedback that we're getting from businesses is that, you know, there is a lot of pent-up demand. However, a lot of the businesses are highly leveraged at the moment because obviously through the pandemic, we've had bounce back loans, coronavirus, business interruption loan schemes, and such like. And a lot of businesses are highly leveraged. And there is concern that there'll be a high level of default on some of those loans. The other concerns are around the labour market. I think at the peak, we had 340,000 people on furlough in West Yorkshire. That's now dropped to less than 200,000. I think the latest figures were about 125,000. Many of those were on low paid jobs as well. So we put forward a proposal to the Combined Authority to approve some skills programs, a £13.5 million investment in Reboot, which is free skills training for affected individuals, and also the Employment Hub, which is again supporting workers that have been made redundant or that are on furlough to find work and do that matching. And of course, since then, the government have announced the Adult Skills Guarantee. Again, more free training, and that's all about upskilling. But of course, that's only addressing the supply side of the economy in the labour market. We still need businesses to create vacancies and to create jobs. And obviously, some sectors have been disproportionately affected compared to others. Brexit's also been a double whammy. So, you know, logistics firms have struggled. There's been delays at ports, some of it down to staff being off sick with having to self-isolate, and some of it down to customs regulations. And again, nationally, we've seen a 40% drop in exports to Europe. So there's still some big challenges for different sectors. We're putting forward a proposal to encourage more business startups, an entrepreneurship proposal, to get more people establishing and setting up their own businesses. It's probably easier if perhaps for a subsequent meeting, or I could send out by email just an economic snapshot, a sort of state of the region and where we think we're at the moment, if that's helpful, because I'm conscious of the fact that it's quite a broad area. But personally, I do think there's still cause for optimism. There are some particular pinch points in retail, hospitality and leisure. But, you know, there's a number of programs that we bring in on stream to try and address some of those. I don't want to sugarcoat it. I think we've got some massive challenges out there. And certainly the GDP figures weren't that encouraging. The unemployment figures were looking pretty grim. Although we did see an increase in new business bank accounts being opened and business formation rates increasing. But I still think there's some big challenges, particularly amongst disadvantaged and isolated communities. You know, what we're seeing is, you know, some of the most deprived neighbourhoods in West Yorkshire have still got the highest levels of infection rate, and vaccination uptake's only 50% in Hales, for example. So I do think there are targeted interventions that we need to think about, working with businesses to mitigate some of those impacts of the pandemic. I'll stop at that because I'm conscious of the fact that I'm talking too much, but more than happy to ask the team, policy and research team, to just pull a short State of the Region presentation together to circulate to members with the minutes if colleagues and the chairman thinks appropriate. Thank you.
Thank you very much.
Simon, can I just a quick word? I think that was a great summary by Brian, and just to emphasise, from what I see, the increase in startups is definitely there. I usually find this in recessionary times, but there is a lot of movement there, and an increase in the business angel movement, which is there to provide some initial finance at the high risk and pre-revenue stage. But it is an area which I think will grow, and I think needs to be encouraged as well.
Yep.
If I may just comment on that, Chairman, again, we're looking at significant investment in entrepreneurship activity, and that will range from high volume, low intensity support to more specialised, high intensity, low volume support for those high growth, innovative businesses, so that we're covering all the bases, from labour intensive startups to machine intensive to the more knowledge intensive startups. And each of those different cohorts have very different needs. So we're refreshing our product and service offer to make sure that we aren't leaving any gaps in that business support market, and commissioning and working with partners to make sure we're addressing those needs. Whether that's social enterprises, community enterprises, or a high growth technology startup. Thank you.
Okay, thanks, Brian. I'll come to Henry next, and then to you after Mike.
Yeah, thanks, Simon. Yeah, just very quickly, I think Brian's still on my thunder there, just on the enterprise, but I would agree with what Colin said. We've probably seen about a 40% increase in inquiries into the business service around startup support, and people who are interested in what funding they can get, but just general advice. And I would say that overall, the interest and uptake of publicly funded business support is increasing. It's probably one of the few benefits of the pandemic, I think, because of the grants that have been available via the local authorities and other government support. It's actually increased the appetite, and we're engaging with businesses from sectors that we've not traditionally engaged with because we haven't really had an offer for them. So, particularly businesses in retail, leisure and hospitality, and especially the supply chain into that particular sector has been really hit very hard. And the grants haven't always been available for those businesses because they've not been forced into closure as a result of the shutdown, yet their actual customers have stopped trading. So it's had a real impact there. And then just picking up on what Neil said, in his update on the BGP, we are seeing the highest demand for CapEx grants that we've had for the last probably 3 years, and it's showing no signs of deteriorating. It's increasing and increasing. We used to maybe have 10 applications a month, and we're heading in that direction per week at the moment. Some sectors are particularly strong: food and drink manufacturing and the supply chain to food and drink manufacturing, medical and healthcare, product manufacturing, and some areas of the sort of precision engineering sectors are all areas where we've seen a lot of growth. But again, as Brian said, we don't want to sugarcoat it because we know many other businesses are really struggling and need to get as much help and support as they can. But there is an appetite for that support now, which might be more through necessity than growth, but nevertheless that is positive for us, and we've engaged with many more businesses in the last 12 months than we had done previously.
Thanks, Henry. So, Mike?
Yeah, just as an add-on, really, a really interesting opportunity for limited companies and actually across the board sole traders partnerships. Some of the tax incentives that are out there now, we're really seeing our customers taking a real interest in that. So I'm talking super deduction, annual investment allowance, which is ongoing, and first year allowances. So I think the key is, it's accelerating investment already. We can see it, and it's certainly accelerating discussions around investment. The key thing that we've seen though is the need for education for businesses to make sure they know about these incentives and fully take advantage of them. But I do see that as a real tangible sort of driver of growth of investment in the short term.
Thanks, Mike. No, really good points there. Okay, excellent. And I think to your point, Brian, I think if there is a summary state of the region that can be pulled together, I for one would really value that if that can be circulated. So I think there's a few other nodding heads on the call as well that would appreciate that. So if we can do that, that would be great. Okay, so if there's no other questions, comments, obviously that brings to a close the open obviously section of the public section of the meeting. Next meeting date is the 12th of May that we've got scheduled in for the next investment committee. So with that, if there's no other questions or comments, we'll bring the public element of the meeting to a close.
Alia, could you stop live streaming now, please?